I will be starting the session in next 1 minute. Some participants are still joining. Good evening, everyone. Welcome to today's session of After Hours with William O'Neill India. So before we go ahead with the session, I would just like to give a small disclaimer that any security we discuss in today's session should not be considered as a buy or sell recommendation and will be just doing it for educational purposes. So after the small disclaimer, let's go ahead with Nifty 50 chart analysis for the day. So Nifty had a muted opening with a positive bias of around 35 points. But after that, Nifty came under strong selling pressure in the next 15 to 20 minutes or maybe half an hour and made an intraday low of 17,430. After that, Nifty made a strong recovery in the next 15 minutes itself and then continued to remain range bound for the latter half of the trading session, which is around 75 to 80% of the trading session. The good part is that Nifty still managed to close above the 17,500 level, which is a strategically good level for Nifty. And the other good part is that Nifty closed in the top quartile of the day's range, which is considered on the technical front a good and a positive sign. Talking about the top gainers and the losers, let's first talk about the top gainers. Hindalco was the top gainer as it gained around 4.4%. Hindalco came up with a superb set of numbers, and we'll be discussing that in the latter half of the presentation as well. The other few notable gainers were Coal India around 2%, UPL around 2%, Tata Steel around 1.9%, and Apollo Hospitals by around 1.8%. Talking about the losers, Bajaj Finance was the top loser around 2.6%. The others were ONGC, HCL Tech, Adani Ports, and Asian Paints, which went down by around 1.9%, 1.5%, 1.4%, and 1.3% respectively. Talking about the sector view, the major sector that stands out is your Nifty metal, majorly on account of Hindalco, which went up by around 4.4%, and partly account of your Tata Steel as well, which had a positive day as well. The other sector that closed higher was your Nifty Private Bank. On the flip side, if we talk about sectors that were closed lower, were Nifty FMCG, Nifty IT, and Nifty Media and Nifty Realty as well. So Nifty Realty and Nifty IT were the two sectors that are that closed around 0.9% lower. And the other notable part that would like to talk about is that both of these sectors are trading below the 200 DMA, which on the technical front is not a good thing. So as the result season is going on, let's talk about some key results that happened during the day. So Indiabulls Housing Finance, the Q1 FY23 PAT grew by around 1.7%. However, the revenue was down by 10.6%. NNPA came at 1.79% versus 1.89% QOQ. So Forgings reported the Q1 FY23 results. PAT grew by around 22%, revenue grew by around 37%, and margins contracted by 130 basis points YOY to 18.3%. Munjal Auto, a small to micro cap stock company, which after a super set of numbers was around 15.3% up for the day, and the result shows us why, because the PAT grew by around 10x YOY to 45.5 crores, and even the EBITDA margins expanded by 100 basis points YOY to 5.2%. The other notable key news is that Bank of Baroda hiked its lending rate by around 5 to 20 bps, depending upon the tenure. So as you were talking about Hindalco did had a beat on the estimates, and the EBITDA and PAT came at an all-time high, which is at around 27% and 48% YOY respectively. Good reduction in a good improvement in your net debt to EBITDA as well, and which can be seen at 1.67x, lower from 2.36 YOY. So Talking about, the Novelis, I mean, the, on the Novelis front, it was kind of subdued mainly on account of higher product pricing, but and in terms of the aluminum upstream, downstream, and copper production, the copper production was up by around 80% YOY, and even they reported a record EBITDA for copper at 565 crores, which is up 116% YOY on the back of higher volumes and better operational efficiency. In terms of the aluminum downstream, it was up around 305% YOY, mainly on account of better pricing and huge improvement in your EBITDA per ton at $261 per ton, which is up 306% YOY. Some key pointers from their presentation is that the global aluminum prices for Q3 CY22 is around 2,400 ton, at which is hovering around 2,800 for Q2, and your 3,200 for your Q1 CY22, which is going lower. But as we talk about the global demand supply imbalance, the China production increased by only 4%, while as the consumption fell by sharp 7%, causing a balance in the market, which can be considered as maybe as a good sign for overall the metal industry going forward. So talking about the results, your stock did went up by around 4.4%, and you can see that the green line, which is the 100 DMA, was able to reclaim that 100 DMA on above average volumes. And even if you look at, the last 1.5 months, you can see the RS line of the stock has been trending higher, which is a good sign. But overall, if we talk about new positions or fresh positions into the stock, it's certainly not advisable. One, if you look at the two-tier structure as well, the Nifty metal index is also trading below the 200 DMA. The stock is trading below the 200 DMA, which is not a good sign. And even if you look at the off highs, even after such a drastic improvement, the stock is still 30.8% off high, which is not a good sign. So now we'll have a look at the chart of the day, and the chart of the day for today is your credit access, Grameen. So before we go about the ratings and the chart, let's have a small, look at uh, how the results came in for Q1 FY23. I mean, there was degrowth or muted degrowth on the AUM front, mainly on account of the company making changes in order to ensure alignment with the new MFI regulations. And however, there was steady profitability of ROA of around 3.3%. There was good GNP improvement of 50 BPS QOQ at 3.1%. But what's positive is that management has maintained the AUM growth guidance of around 24 to 25% for FY23, which is expected to be driven by customer acquisitions going forward, and they're expecting the borrower base to increase by 10 to 12% YOY. NIMs have kindly stable at around 11.2% YY, which is a good sign. The other good sign is that the company's credit rating was upgraded to A minus stable by Indra, making it the highest rated NBFC MFI. So all of this, if you look at it, it's a really good sign for the company, and similarly can be seen in the EPS strength of 90 as well. And if you look at the last 3 quarters of your sales improvement, in this case, your NI improvement and the EPS improvement for the company has been in your double digit growth. And if the talk about the EPS growth, has been in triple digits. That's why you can see the EPS strength, which is great at 90 for the company. So overall, the stock is forming a stage to cup with handle base once the stock did try to break out, but was unable to do so. But today's move has been a real positive. If you look at the stock is around 6% up on very above average volumes, which can be considered a good sign. If we talk about the RS line and the RS rating as well, over the last few months the RS line has been moving higher, which is a really good sign. If you look at if one is getting concerned about this, I mean the RS line going down in the handle part, that tends to happen because the stock tends to consolidate or mildly correct in the handle part as well. So, which is not a sign to worry. Overall, I mean, on the fundamentals front as well, the stock has been delivering good results in the last 3 quarters, and on the William O'Neill rating front as well, the stock is really good. So let's see if in the coming time if the stock is trading for 2% below the pivot. So in the coming time, let's see if the stock is able to provide a successful breakout or not. And the successful breakout should be on above average volume. And let's see if it happens or not. And thank you. And do stay connected with us on the pre-bell and the after-hours session, and on the weekly shows of your Stock Darbar and the show by Trader Smith as well.